Ugh, it's burnt today. Ugh. Time to fire the minions. Yuck, is that terrible coffee? Ugh. Hey, good morning, everybody. It is a Thursday, the 21st of April, 2016, and it is an ECB day. Yeah, we got an ECB interest rate decision and press conference, and that's going to rule our world for the next little bit. I suggest we watch Euro USD and Euro Yen. What do you stink? Smell like a plan? Let's get her done. Play the happy music. Wait, do you hear two sets of music? Yeah, you probably do. Let me mute that. Anyways, hey, let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hola. Ni hao ma. Ohio. Ni hao lao shi, as Miles says. Yeah. Hey, Daniel. Daniel's back from Hong Kong. Did you have a nice time in Hong Kong? Cool. Hey, it took the maglev, as you suggested, made it to Shanghai. So thank you for that tip. Yeah, pretty sweet. Anyways, hey, guys, we do this these strategy sessions every day, Monday through Thursday here at Forex.Today and every Friday at FXStreet.com, where I am Forex Speaker of the Year. Thank you, everybody. So today, today I think what we're going to do is just simply cover the ECB announcement and then get out of here. Oh, Lao Shi is teacher? Oh, cool. Namaste, my good friend. Yeah. So anyways, cool. So, yeah, let's just get with it. So it comes out in about 9 minutes or so. Little skippy scalpy. Well, if you want to do that, if you want to do skippy scalpy, you can do something like this, where you drag in. I'm going to drag in auto stop. Oh, no, you didn't. What do you want to do, 25-25 OCOs or 10-10? How about 15-15? Is that too much? Too close? Yeah, Roger, the binary option platform was taken down because it was slowing MT4 down. We didn't want to risk our super high speed execution. Miles wants to do real daring. All right. Well, how about 2020? Maybe we can get out early. Is that fair? Fair compromise? Yeah, Roger, but I would like them back. In particular, I like to use binary options around news events and for hedging large cash positions. All right. So anyways, yeah, so we're going to, I guess, scalp. That's what you guys want to do, some little skippy scalpy. Okay. 4 hour wants to head up. Daily wants to head up. Oh, snap. But we got a fundamental event risk in front of us, so it doesn't have to necessarily do anything. But what we were talking about yesterday is maybe setting this thing up for the 4 hour to drop. Do you guys remember talking about that? I don't know, it was yesterday, but you remember setting this up for a 4 hour drop and then lining it up with the daily? Neato stuff. Right? So now we're here and the event's going to come out and it can do anything what it wants. It can go against the technicals, so it don't matter none. Oh, Miles says no. You taught us now to use puts, so no need for binaries. Yeah. You're right. It's very similar, especially if you're doing a one-to-one, like I just set up a 2020 OCO. It's essentially the same as a binary. A binary, let's say, may only pay you 85%, and in this case, a 25-25 or a 2020 OCO would pay you 100%, one for one, but you have to pay for the spread, so it works out to be about the same. The only major difference is that if you're trading the foreign exchange market, you can collect interest and you can have unlimited upside if you manage your risk properly, right? You can move your stop to break even, have no downside and unlimited upside, which you would never, ever, ever get with a binary. You know what I mean? So very interesting. Well, Miles says he doesn't, never got the advantage of a binaries. The major advantage to binaries is that you face no volatility risk. Okay, we're about 5.5 minutes away from the ECB announcement and then the press conference. Press conference is until 8:30 though, I think, right? So. Oh, what do you mean no volatility risk? Okay. Let's say we're trading non-farm payrolls. Oh, how about this? No. Let's say we're trading the ECB announcement. Okay. And he says he's totally open to helicopter money. He wants to throw euros out of a helicopter. Quantitative easing, more quantitative easing. Okay. Okay, cool. Euro could weaken very significantly, very quickly, right? But what if he doesn't say that until the press conference? Or he doesn't say it at the beginning of the press conference in his speech. So let's take that. Okay, let's say he comes out and they say no interest rate change. Okay, that's expected, right? Okay, then 8:30 comes out and he reads the statement, right? The governing council's statement at 8:30, and let's say it's as expected. So at first, the market takes it as bad news, and the euro skyrockets, but you've shorted it. You're short. And the market goes, oh my gosh, ECB is not going to do anything. Up, 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 up. Let's say up 100 pips. And you're short. What's the likelihood that you will take the loss and get out of that trade? You shorted before the conference. He reads the speech, and everybody interprets the speech as no further quantitative easing. Yeah, you're already out, right? Or you took the loss, right? Yeah, okay. Well, let's say with the binary, you just said, okay, well, I'm going to use a binary to short the market, and I'm suggesting that the Euro USD will be lower than where it is now in 2 hours. Okay. So the press conference comes out. As I said, he doesn't indicate anything in the statement that he's going to change the policy. He's not going to add more quantitative easing. He didn't touch negative interest rates. So no change, right? So the Euro USD goes up 100 pips. If you're in the cash market, the smart thing to do would be to take the loss and get out before you face any other risk, right? The binary, it doesn't matter. You're not going to lose more money if you're down 100 pips or if you're down 300 pips. Doesn't matter. Okay, and then during the press conference, somebody asks him about helicopter money and whether he's going to do more quantitative easing and throw euros out of helicopters and flood the market with euro. And what if he says something like that? And he says, "Yeah, well, yeah, we're gonna dump money out of helicopters." The euro goes and tanks. And with the binary, You either win or you lose. It doesn't matter to what degree you win or lose. Okay? And so in the binary, you might actually profit. And you're not going to panic, right? You're not going to panic if things go against you. You could sell and go away. Yeah, so there's no stop loss. It's all built in. It's either going to be lower than the price now or it's not. That's the binary, 1 or 0, win or lose. So what if you want to trade overnight while you're sleeping? What if you live in the United States of America? You sell, let's say you sell pound yen in the late Asian session, go to bed. Now you don't have to worry that the pound yen's going to jump 300 pips against you. Okay? No, it's not gambling. It's only gambling if you haven't done research ahead of time. So what I talked about in China is that if you use technical and fundamental analysis, it's not like gambling because it's like getting the cards dealt to you, and then the dealer shows you what cards are left in the deck before dealing the next card. So you can say, oh, there's 2 kings, there's a queen, there's 3 aces. Okay, I got a pretty good idea of how. Unchanged. Unchanged. Nothing's changed. Everything's unchanged. Don't forget Poland. Their meeting minutes are coming out soon. All right, so yeah, so binaries. I actually did a presentation in China about binaries, and yeah, so I was saying, look, you can still do your fundamental analysis. You can still do your technical analysis.
Focus on implementation. Asset purchase program maintained at $80 billion a month, so they're going to focus on implementation.
All right. So, anyways, we're gonna have to wait for the press conference there. So imagine, okay, you're playing blackjack, right? And there's 5 other people at the table. Boom, 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 boom. All the cards are dealt, and you don't know what the other people are have in their hands, but you can see what's in your hand. So you're like, okay, well, I see, a pair of jacks, which is one of the worst hands to get because it'll suck you in, but it won't win. But all of a sudden, the dealer will show you what's left, and you're like, oh, there's still 2 more jacks in that deck. Would that influence your betting to know that no one else at the table has a jack? There's 2 more jacks in that stack? Well, that's what fundamental analysis is. That's what technical analysis is. You know the odds. You don't know the outcome, but you know the odds, or close to it. Well, that's what research is. And so therefore, it's not gambling if you said, well, I've studied macroeconomics and central banking policy, right? I know what the trends are. I know what the data is, right? And I know what the technicals show. I know the direction of the trend. I know whether the market's overbought or oversold. No one's got a gun to my head whether I have to trade this or not. So it's only gambling if you don't know what the hell you're doing. Right? Some people would say, well, Forex is gambling. Trading the market's gambling. Yeah, only if you don't know what the hell you're doing. So, anyways. So, what I told people is I like binaries for scalping, especially high volatility news events, because the volatility. So, how about this? Have you ever seen news where you get whipsawed in the course of, just a few seconds or a few minutes? Right? The thing jumps 20 pips and turns around, drops. Would not affect you in the slightest with a binary. Or how about you trade just before? Now remember, if you use like an ECN, like what TradersWay offers, it's not TradersWay jacking up your spread. It's the interbank system. It's JP Morgan and Goldman Sachs. And it's not that they're trying to cheat you or be mean. It's you're trading when no one else wants to trade, and therefore the spread is high. Right? You're taking anyways, can knock you out. The spread could knock you out. I haven't seen it at TradersWay, but I know back in the day, brokers sometimes would jack the spread up to like 35 pips on the Euro USD right before NFP. Well, with the binary, it's not going to affect you in the slightest. You know what I mean? So, anyways, that's sort of how a binary. Or the other way I do it is I use it as an insurance policy for my first entry trades in trend trading, in position trading. So like this move here, I wouldn't call this an uptrend, would you? But there's clearly an upward move. So what if you bought and then hedged with the binary option? So if it falls, you take a small loss in the cash, but you make some money on the binary, and you reduce your risk. But for some reason you're certain this is going to go up now forever. Well, it's not quite an uptrend yet, so it's risky, but you're certain based on your analysis, and you're like, this is where I want to buy it. But because it's the first entry, I'm going to hedge it with a binary option and be long the cash because the cash earns interest and has unlimited upside potential, right? But you have a stop close, so if you get knocked out, if it falls, the binary will pay money and pay for some or all or most or much of your loss, and therefore your risk is diminished, and it costs you a little bit of money. It's an insurance policy. But if this produces a higher high and a higher low and a higher high, you're in an uptrend and you caught the bottom. So you can use it as see what I mean? But that's a little more sophisticated than what amateurs think of, right? Miles says professionals don't really use binaries, though. Well, they use other types of options. Who cares about the asset class, right? Can you set up a binary to cover a weekend event? I'm not sure what I'm not sure what you mean. Because if the markets are closed, then there's nothing, right? But you can do things with a binary, and right now TradersWay does not offer binaries. They used to, and I think they're going to add another platform, but I can't be certain. Right? And but you could do things like, say, at the end of the month, at the end of the quarter, in 6 months, at the end of the year, the euro will be higher or lower, for example. So you could say on Monday morning, the Canadian dollar will be stronger than it is now, which could be a Friday. So you could do it that way to play the DOA event. Yeah, yes, yeah, you can certainly do that. Yeah, not a problem. Yeah, it's not any time frame because they're basically contracts, Ryan. Ryan says so you can do any time frame, hourly, day, week, or month. Some binaries last like 3 minutes. 60 seconds, I think, are the fastest binaries. At the end of 1 minute, price will be higher or lower. Well, that's a lot closer to gambling, isn't it? Now, Richard says binaries are usually offered by dodgy brokers. Well, there's no doubt about that. And when products are new, and even Forex was like this when I started Forex, it was mostly marketed as a get-rich-quick scheme. And yeah, that's dodgy, isn't it? So that's one reason I'm here, is I'm here to share my experiences and to educate. so that you don't get sucked into such nonsense, right? So all of it's true. It doesn't have to always be true. Okay. Oh, Ryan, the way that it works is, let's say you want to risk $100. So you say $100. And if you're right, you'll get $185 back. If you're wrong, you lose your $100, for example. And the difference in price would be similar to a spread. So that would be a 10-10 OCO, for example. You'd pay about the same. No, it's about 1-to-1. Miles says worst risk reward ever. No, it's about 1-to-1. So like on this one, I set up a 2020 OCO. It's still a 1-for-1. I have to pay for a spread too. So it's going to come out to, in this case, let's say $200 will pay, $370, right? Yeah. So anyway, it's one of these things, guys. Like, don't paint yourself in the corner and say you can't do this and you can't do that. Educate yourself. When binaries first came out, I read, I think, 3 books, and I almost wrote one. I thought, people might like this. So no, Miles. Let's say you did one standard lot on Euro USD, and your spread is 2 pips. That's $20. There it is. So a 2020 OCO is going to work out. Once you pay for your 2 pip spread, it's going to be 180. So it's the same as a spread, whether you call it a spread or a commission or whatnot. What's the difference? Just cost of doing business. Call it whatever you want. Well, we're not talking 100 pip targets. Right. So we're talking like 10-10 or 20-20. So anyways, I don't think it makes any material difference, but maybe that's just me. All right, so waiting for the ECB meeting in about half an hour. Well, Miles says, so it's equivalent to 10 pips on OCO. Well, again, it comes down to the money. So one thing, like with the binary, ways I've gotten lucky is that I've had times, how about this? When scalping, okay, scalping. Let's say you're trading this move in here, guys. It hasn't broken out yet. Okay, so we're in this section here. Okay, let me kind of highlight the area I'm talking about. And you think, let's say you think this is going to go up. Okay, and you're in here. So you buy a dip here, and after a certain amount of time, you get out because you just feel like it's not breaking. So let's say you bought pretty low, comes up, comes down, comes up, comes down, comes up, down. You're up there for hours and hours and hours and days and days, and finally you take a 20. You take your winner early, but it's hardly any pips. With a binary, I've, let's say, bought low, and at the end of the day, it didn't break out, so I'm only up 5 pips, but it would pay me for like the whole 25 pips. Boy, I didn't explain that well. How do I say it? Okay, let's say you're doing a 25-25 OCO. Okay. Have you ever had price go up 20 pips and then come all the way back down to your entry? You never quite get knocked out. And maybe you take a small loss or a small win. With a binary, there have been times when I said like 25-25 OCO, but it expires and I'm only up 5 pips. Now, the interesting thing with the binary is it's going to pay me the full 25 pips. Whether I'm up 5 pips, 2 pips, 7 pips, 17 pips, 22 pips. Imad says, can you get out of binaries early? Yes. Most platforms, the answer to that is yes. So when you're scalping, it's pretty sweet. I've also gotten out of binaries early because it wasn't going my way and I took a smaller loss. Miles says, yeah, if you're only down 1 pip, you could lose everything if you're not right. The problem is that shouldn't happen. Like, why the hell are you wrong? I mean, look, when you take the trade, eventually, especially if you're scalping, within a few minutes, you should be, profitable, right? You shouldn't be sitting on a losing scalp for a half an hour, right? Because then it was just a bad trade. But everything happens eventually, right? But so I think I did a horrible explanation. I'm still not caught up on sleep, so I apologize for that. So how do you feel about the zone that we're in for euro yen? Kind of a tricky area, huh? Ryan says, sounds like binaries make more profit when properly used with technical and fundamental analysis. It's just another tool. Is that right, Miles? I've done some videos earlier when TradersWay had a binary option platform. So they're on the YouTube channel on Forex.Today, YouTube channel. So you can take a look at it. And there was one time where I did like 6 scalps, and we were profitable, I think maybe on all of them using binaries. Anyway, so we're in a weekly R2 area. This is a very risky area to buy. And really, if you were conservative, you would be looking for opportunities to sell this, not buy it. And if you disagree with that fundamentally, then you should probably stay out. Buying this close to weekly R2 means you don't believe in pivot points or you have no discipline whatsoever. You're more than a little bit pregnant. Anthony says he gets all kinds of spam trying to open binary accounts. Yeah. There was a time when I looked at, I told you I read some books and I was thinking about even writing a book, and then I thought about even starting a binary platform. So I talked to a few people. One guy, he was set up in the Caribbean somewhere. Where was it? Dominican Republic, not Dominica, but Dominican Republic. Anyway, so I talked to him on the phone, and he was telling me, he's like, the secret to success is just hire an entire call center. Right, and do whatever you can to get people to put in $50. He's like, it's awesome because they lose their $50. Like, that's the hardest earned $50 ever. But apparently, if you get 10,000 people to lose $50, I guess it all adds up, right? So clearly, I wasn't interested because that's not what I wanted to do. So that kind of stuff is out there for show, but yeah, hey Ryan, yeah. All right, so yeah, so anyways, half an hour to the ECB press conference. The way that it works is the governing council works together to write a statement, and then we'll have some Q&A from the audience. And in the Q&A, Draghi is expected to maybe, which means he's not going to do it, but anyways, expected maybe to um, hint about changing things maybe around the June meeting. But the way that the ECB does things is they'll announce something in June and then do it in October. So helicopter money. So you guys have been reading that, reading about that in the paper or hearing about it on TV. It goes back to Ben Bernanke, and maybe even somebody before Ben, maybe even before Ben, but it was more famous. They used to call him Helicopter Ben. And it comes from the idea of just flying around in helicopters, throwing money into the street. Okay. But remember, though, that's not the issue that matters. Where's the Fed? You know, the Fed printed like, what was it, 3 trillion? I can't even remember anymore. But you know all that money that the Fed printed, right? Where is it? Was that Gregor? Gregor says it was Helicopter Ben. Yeah. Yeah, it's in the banks. So has that truly helped the U.S. economy? No, it's helped balance the bank's balance sheets because now they have this cash. But where's the cash? Do banks actually park the cash at the bank? No, it's parked at the Fed. So the Fed moves some ones and zeros on a computer screen to Bank of America. Bank of America has now reserves, required reserves, excess reserves. So those would be excess reserves. So where does the Fed park, or where does Bank of America park its excess reserves? At the Fed. So has money supply actually gone up? No. So what's the word for it? It's not money supply. What do you call it? When you're including money in the economy and money at the Fed, what do you call that? That's not money supply. That's no, it wouldn't be even M2 because it's not counted. It's come on, I can't remember. So anyways, so it doesn't do anything, right? So what we need to measure as economists is velocity of money. So let's say I give you $100 and you never spend it. How much does it impact your life? Okay. What if I gave you $1 million and you're not allowed to spend it? You can't use it for collateral. You can't use it for anything, but you have it. Just takes a lot of space up in your living room, right? And you're like, sorry guys, this $1 million is in the way. It's too heavy. I can't move it. So just kind of, we use it as a coffee table, you know, just kind of move, walk around, just step around the $1 million. I feel so embarrassed, you know, but anyways, right? Put your feet up on it. Doesn't do any good. So if the Fed or any other central bank prints $1 trillion and nobody spends it, it doesn't do anything, and it doesn't increase money supply, right? So what we want to measure as economists, especially ones that want to make money, is for, you know, how many times does a dollar change hands? If I gave you $1 and then you went to the store and bought something with it, and the store, you know, puts it in their bank, and then the bank uses that, puts that in a loan, and someone uses that loan to buy a house, you know, and then someone with a house then hires a plumber to do some fixing, and then the plumber, you know, buys lunch at Burger King, and then, you know, Burger King uses it to buy some more burgers, and then the burger company buys it, you know, to buy things from a farmer or a rancher, and the rancher uses it to buy feed to feed the cattle, and the feed comes, you know, comes from the feed supply, and the feed supply comes from the corn producer, and the corn producer buys, you know, corn seeds and fertilizer, and, you know, so on and so forth, and this dollar keeps changing hands, right? That's a velocity, and that would be an extraordinary velocity. Now, velocity of money in the United States has been falling drastically over the last 30 years. Okay, Richard's really interested in Aussie dollar, huh? Why now? US dollar right now is weak, so you're probably better off being long. Okay, no, well, it's an uptrend on a 4 hour, but you have some headwind even on the 4 hour. Daily is overbought, but it's still showing upside for sure. Your 15-minute, it doesn't have a very good Stokes. Did you buy it at the 78? Did you buy it on the retest of 78? You had it? Yeah. I mean, yeah, I wouldn't call it the world's greatest trade, but, you know, sometimes we're just trying to make money, right? So here we are. This is the key level I was telling you about. Even if, okay, even though it went up, this is a high risk trade, and it would be very foolish. Why is the pound strong? Because I tried shorting it at London. No, it's strong out of spite. Maybe it's because it's the Queen's birthday today. Okay, but no matter what you're trading, guys, what we're looking at right now is an ECB event risk coming up very soon. Okay. Miles says, what about daily Aussie dollar need to retrace to the monthly pivot, roll reversal, and then up? Well, it does look overbought. It shows no signs of coming down at the moment. In the 4 hours, you know, we're still above the 21, although we're starting to potentially have some divergence on the stochastics. So, you know, it just looks like maybe mediocre upside potential, and at some point a retracement will be necessary. But it could be 3 days from now, right? It could be Friday. Yeah, it is her 90th birthday, Anthony. I had to decline though because I just got back from my trip and I'm just got to take a break from traveling. I said catch you at the next one. Yeah, maybe next year, Liz. The Queen of England. Maybe next year, Liz. Maybe next year. So one of the things we talked about yesterday is little upside potential on the S&P 500. Do I have it on here? I thought I'd have. Oh yeah. More weakness out of the U.S. dollar. By the way, that Aussie dollar is moving, but I don't believe it's Aussie. Actually, looking against the yen, it's a little bit of Aussie. Commodity currencies are actually strong, so maybe it's all commodity currencies. Kitty Cat is probably having a better move than Aussie, but the U.S. dollar is weakening. So this is more of a U.S. dollar weakening. Probably people unwinding out of Euro USD shorts. Okay, so just if you're in that Aussie dollar move and you're like, "See, Wayne told you," well, it's not really an Aussie move. I think I think almost anything with a how about this? Almost anything with a USD on it is gaining, and Aussie's probably not even the strongest gainer. Looks like CAD has moved more. Looks like pound dollars moved more. Looks like euro dollars moved more. And so you might say, oh, well, see, Wayne told you Aussie dollar's going up. Yeah, well, almost anything else would have gone up more. Yes, Miles, sure, absolutely. Remember, a lot of people started shorting this at, wait, that's confusing. Um, most people, or a lot of people started shorting this at 140. So I want to watch this. I'm trying to take the dollar out of the perspective because really I want this to be a euro story. Okay, breaking out of the weekly pivot points. Very interesting indeed. Trying to squeeze the dollar out of the equation here. But, a lot of people are obviously short or could be short Euro USD. Remember, your job here is to decide what you want to do, not even today, but what do you want to do tomorrow? By the way, have you guys been working on that concept? I think I asked you about a week ago to start writing down today what you think is going to happen tomorrow. Just even doing that exercise changes your perspective, right? From sitting down and looking for a trade, which is a dangerous thing to do, right? To sitting down and doing your analysis and you're thinking about tomorrow and the next day and the next day. So it's like, do you think this is going to go up or down? If you're not even sure, you could do things like, well, what if it goes up today, right? Where does it turn bullish? Is is that a bullish move, guys, or bearish move that we're looking at? So I'm trying to keep you focused beyond what's going to happen in the next, 12 minutes. So what needs to happen for this to become bullish? Okay. So if this spikes, are you going to sell it again, even if we're at 126? If this jumps 100 pips or more, 150 pips, do you sell it? Right? Well, that would put us at the monthly central pivot point in the throes of this kind of area. So 126, 126.50, 127, all that kind of stuff. You could sell at the monthly central at 126.0000, for example, and it's still technically, because it hasn't made a higher high, still technically is bearish, isn't it? How do I want to draw this? Boy, this drew really funny. There we go. Wow, this is behaving weird. It drew really funny, and then it won't let me kind of expand it. Maybe I clicked the wrong thing. Anyways. Yeah, it won't let me change the channel. All right, so anyways, let's put it like that. So it's still, even if we're way up here, it's still technically bearish, right? So you could let it pop and then take a shot to drop it. A pop and drop. Or at the very least, a pop and stop. Miles says, daily 21, why not dump it now? Well, yeah. The only thing is you have an event risk. So Draghi could say something that is just something as simple as not going to do additional quantitative easing. Or even something that could be interpreted as such. Then it goes up. No one gives a dang about that daily 21. Okay? So that's why not to do it now, Miles. Yes. Event risk. Absolutely. Remember, these trends are created by fundamentals. Okay? Not technicals. Now this messes things up, but I don't want to spend time erasing things. Okay, this, well, maybe I can do it this way. Okay, 618 retracement. Predicts what? 1382. This is going to get really messy. I'm going to have to reset this. 1382 is 17 and a half. Okay. By the way, this euro yen is at the daily 21, but so is the USD yen. I think we talked about this. Couldn't have been Monday. Maybe well, let's see, Monday. Yeah, I did Monday from China, right? So I think it wouldn't have been Monday. Maybe it was Monday. Anyways, I was talking about the daily 21 on the USD yen. But long story short, there could still be some upside or downside, even if this goes up. you should ask yourself, has anything fundamentally changed? Are you still a bull or a bear? This should stay bearish unless we've priced in the bottom. If Draghi's done, then there's no reason why it needs to continue going down. Does that make sense? So not down is up. If the Fed raised interest rates tomorrow, this would go down like a ton of bricks. You know what? Let me just change. Let me just clean this up. Yeah, that's so much better. There we go. Okay. So again, if it were me on looking at this chart, I could not buy this now. Okay. If I was interested in longing it, I did have a chance here. It would not be an amazing chance. It's really, the move was from here to here. So really, Monday morning, I should have been ready to go. But, you know, I don't know, kind of risky. But a monthly, weekly pivot cluster, you know, I've done weirder things, right? This was okay, but probably mediocre at best. Buying it now up here just seems lame-o, doesn't it? Oh, what TV channels? On the left is CNBC, and on the right here is Bloomberg. Yeah. So euro, yen, and pound yen, I remember talking about yesterday being at daily 21s, and they are through them. And the CAD and the Aussie were already through them. So it looks like yen weakness should continue. Well, I believe all the yen repatriation stuff is over. So, you know, remember when all the experts were so confused about why the yen was so strong? Well, I think we've cleared out that excess liquidity, and I think it's game on again. But I already told you that like 1,000 years ago, right? That the yen would be strong in the beginning of January and then February, or no, January and April, and then what? Then I said back up and then back down, and then sideways all summer, and then we'll be buying them in August. So I mean, it's I don't know. It's just it's all there. I mean, it's just straightforward. So no, Miles, I wouldn't be shocked if we have a nice little rally and then it exhausts a little earlier than people would expect. So let's say the Fed raises interest rates in June. That might affect everything, right? What about Brexit? Yeah, all that kind of stuff. Richard asks, how do I do volume if I'm watching two TV channels at once? I don't tend to listen to the news. Yeah, Miles says the Fed won't touch interest rates until after the election, but I think everyone's priced in December, or not, maybe not priced it in, but believes in a December hike. It's probably just too early to do that now, but they believe it's going to be there. So 1350 tested. I think we have a little pivot above this area, so it'll be very interesting what happens. Stefan says, will the rally in grains and other commodities bring inflation to the U.S.? Absolutely, totally, yes. And to me, it's absolutely, totally encouraging. But, we've been seeing an increase in the CRB. We've been seeing an increase in the Baltic Dry Index, right? We've been seeing an increase in commodity currencies. The signs are there, guys. We've printed bottom on oil. The answer is yes. Initial jobless claims 247. So the ECB press conference has not started yet. It should, though. Should be. Stabilization for dollar near a double bottom. So you could see earlier today there were lots of Euro USD shorts, and now a lot of them have come off. So everyone that wanted to get short is short. Everyone that wanted to get out of the short is out. We're just waiting now for the ECB. I say decide what you want to do and then prepare to make a trade after the news event. Yen moving sideways. Pound dollar monthly resistance. Remember euro yen weekly resistance. I see weekly resistance on pound dollar, weekly resistance on gold. Nice move on oil though. We've predicted some nice moves on here a couple of times. Didn't I have oil going up to like 56 or something? And I said, I don't think it's actually going to do it technically or fundamentally, but technically, wasn't it going up way up there like that? Maybe it was only 46. All right, I'm going to refresh this page because I don't see any ECB meeting. No? Oh, was it 46? Oh, okay. So anyway, so I guess I got you to 44. Well, you're welcome. Well, maybe it's still on here somewhere. Is it maybe here? No, I don't see it here either. Well, we had it somewhere. Okay, we're live. Here we go, girls. Well, we don't care about rate cuts. More QE would be good, I think. That's what we're looking for as far as helicopter money.
Ladies and gentlemen, the Vice President and I are very pleased to welcome you to our press conference. We will now report on the outcome of today's meeting of the Governing Council, which was also attended by the Commission Vice President, Mr. Dombrovskis.
Can you hear okay?
Based on our regular economic and monetary analysis, we decided to keep the key ECB interest rates unchanged. We continue to expect them to remain at present or lower levels for an extended period of time and well past the horizon of our net asset purchases. Regarding non-standard monetary policy measures, as decided on March 10, 2016, we have started to expand our monthly purchases under the asset purchase program to 80 billion from the previous amount of 60 billion. As stated before, these purchases are intended to run until the end of March 2017.
See, didn't I tell you buying right next to that weekly R2 is incredibly risky? And that the only way you could do it is if you didn't use weekly pivots or if you lack discipline.
Moreover, in June, we will conduct the first operation of our new series of targeted long-term refinancing operations, Caltro 2. And we will commence purchases under our corporate sector purchase program. Further information on the implementation aspects of the corporate sector purchase program will be released after the press conference on the ECB's website. Following our comprehensive package of decisions taken in early March, broad financing conditions in the euro area have improved. The pass-through of the monetary policy stimulus to firms and households, notably through the banking system, is strengthening. However, global uncertainties persist. Looking forward, it is essential to preserve an appropriate degree of monetary accommodation as long as needed in order to underpin the momentum of the euro area's economic recovery and in order to accelerate the return of inflation to levels below but close to 2%. The Governing Council will continue to monitor closely the evolution of the outlook for price stability, and, if warranted to achieve its objective, will act by using all the instruments available within its mandate. In the current context, it is crucial to ensure that the very low inflation environment does not become entrenched in second-round effects on wage and price setting.
Here it comes.
Let me now explain our assessment in greater detail, starting with the economic analysis. Euro area real GDP increased by 0.3% quarter on quarter in the fourth quarter of 2015, supported by domestic demand while being dampened by relatively weak export trends. Incoming data for the first quarter of 2016 point to ongoing output growth at a pace broadly similar to that in the final quarter of 2015. Looking ahead, we expect the economic recovery to proceed. Domestic demand in particular continues to be supported by our monetary policy measures. Their favorable impact on financing conditions, together with improvements in corporate profitability, is benefiting investment. Moreover, our accommodative monetary policy stance, continued employment gains resulting from past structural reforms, and a still relatively low price of oil should provide ongoing support for households' real disposable income and private consumption. In addition,
Coming up to the midpoint psych level.
likely expansionary. At the same time, the economic recovery in the euro area is still dampened by the ongoing balance sheet adjustments in a number of sectors, the insufficient pace of implementation of structural reforms,
Oh, we lost audio?
have improved overall financing conditions, which should support the outlook for consumption and investment. However, uncertainties persist and relate in particular to developments in the global economy and to geopolitical risks. According to Eurostat, euro area annual HICP inflation in March 2016 was 0, compared with minus 0.2% in February, reflecting mainly a rise in services price inflation. Looking ahead, on the basis of current futures prices for energy, inflation rates could turn negative again in the coming months, before picking up in the second half of 2016. Thereafter, supported by our monetary policy measures and the expected economic recovery, inflation rates should recover further in 2017 and 18. Turning to the monetary analysis, broad money, M3, continued to grow at a robust pace in February 2016, with its annual rate of growth remaining unchanged at 5%. As in previous months, annual growth in M3 is mainly supported by its most liquid components, with narrow monetary aggregate M1 growing at an annual rate of 10.3% in February after 10.5% in January. Loan dynamics followed the path of gradual recovery observed since the beginning of 2014. The annual rate of change of loans to non-financial corporations adjusted for loan sales and securitization increased to 0.9% in February 2016, up from 0.6%.
Yen trying to weaken.
Developments in loans to
It's not just euro yen, it's all yens.
reflect the lagged relationship with the business cycle, credit risk, and the ongoing adjustment of financial and non-financial sector balance sheets. The annual growth rate of loans to households increased to 1.6% in February from 1.4% in January. The Euro Area Bank Lending Survey for the first quarter of 2016 indicates further improvements in loan supply conditions for enterprises and in loan demand across all loan categories. Improvements in demand for bank loans were supported by the low level of interest rates, financing needs for investment purposes.
Wow, Oscar Mike.
Overall, the monetary policy measures in place since June 2014 have clearly improved borrowing conditions for firms and households.
All yens on the move, in particular pound yen, euro yen.
Comprehensive package of new monetary policy.
You should probably jump on some commodity currencies. CAD's delayed, Aussie's delayed.
In loan growth, thereby supporting the recovery of the real economy. To sum up, a cross-check of the outcome of the economic analysis with the signals coming from the monetary analysis confirmed the need to preserve an appropriate degree of monetary accommodation in order to secure a return of inflation rates towards levels that are below but close to 2% without undue delay. Monetary policy is focused on maintaining price stability over the medium term, and its accommodative stance supports economic activity. As emphasized repeatedly by the Governing Council and as strongly echoed in both European and international policy discussions, in order to reap the full benefits from our monetary policy measures, other policy areas must contribute much more decisively, both at the national and at the European levels. Structural policies are essential, given continued high structural unemployment and low potential output growth.
This is that first sell zone at 125.
Actions to raise productivity and improve the business environment, including the provision of an adequate public infrastructure, are vital to increase investment and boost job creation. The swift and effective implementation of structural reforms.
Next one is way up there at the next level, 126, 100 pips higher.
Higher sustainable economic growth in the euro area, but will also make the euro area more resilient to global shocks. Fiscal policies should also support the economic recovery while remaining in compliance with the fiscal rules of the European Union. Full and consistent implementation of the Stability and Growth Pact is crucial to maintain confidence in the fiscal framework. At the same time, all countries should strive for a more growth-friendly composition of fiscal policies. We are now at your disposal for questions.
President, Alessandro Speciale from Bloomberg News. My first question is on the corporate bond program. If you could give us some more details on the composition, the maturity, how the purchases will be carried out, and what is the contribution that you expect from corporate buying to the 80 billion target of your purchase programs. And you have said that you remain ready to use all instruments available within your mandate. So my question is if so-called helicopter money.
Whoop, whoop, whoop. First guy out of the gate.
Preliminary studies in this direction.
Good thing he combed his hair and shaved today, huh?
Legal feasibility of such program in any form that doesn't run into the prohibition of government financing. Thank you very much.
Thank you. You will get all the details of the corporate program shortly after the press conference. But let me just say a few things here. I can tell you the universe is addressed to all non-banks, also to insurance companies that have a certain rating. So if a company owns a bank, but it's not a bank, its parent company is not a bank, it's suitable, it's eligible. But if the parent is a bank, then they're not eligible. The risk is shared, it's fully shared. The maturity goes up to 30 years. The issue limit is up to 70%. And they will contribute to the overall size of 80 billion euros per month. On your second question.
I think we're kicking off of the monthly pivot. Yeah, there it is. So it's actually on a different price on a different platform.
Where it's had. Let me read exactly what I said in the last press conference. I said, the question is about what you asked, and I said, we haven't really thought or talked about it. It's a very interesting concept. It's now being discussed by academic economists and in various environments, but we haven't studied the concept. It clearly involves complexities, both accounting-wise, legal-wise, and it may mean different things to different people. Then in answering to an MP who asked me about the same question 2 days ago, I said the concept is fraught with operational, legal, and institutional difficulties.
That looks like a buy zone if you're a bull.
The mechanical update of your inflation forecasts. I'm curious how much does the March measures add to the forecast? If you could give us a precise figure, that would be wonderful. But I'm also interested in how the oil price increase and the real exchange rate firming affects the inflation outlook.
I'm picking 2 out of your 3 questions.
One was about Germany, definitely. The other is the mechanical update of the inflation forecast and what affects it.
Well, to your first question, let me say, first thing is that we have a mandate. We have a mandate to pursue price stability for the whole of the Eurozone, not only for Germany. This mandate is established by the treaty, by the European law. We obey the law, not the politicians, because we are independent, as stated by the law. And by the way, all this applies to all countries, to all politicians in the Eurozone. This morning we had a brief discussion on this issue, and I can report to you that the Governing Council was unanimous in defending the independence of the European Central Bank and the appropriateness of the current monetary policy stance. Having said that, let me say that our policies are not very different from policies that are being implemented in a very large part of the world, in all the other important jurisdictions. And our policies work. They are effective. Just give them time to fully display their effects. Of course, if there were also structural reforms, the effect of these policies would be quicker. But the bottom line of this is that our policies are the necessary policies for a return of the inflation rate to our objective of a level below but close to 2%. Are the necessary conditions for
1 minute cycle down
to higher level, and are the necessary conditions for return of interest rates to higher level to a higher level than today. On your other two questions, I can only say that are the monetary policy measures that we have enacted in March had the effect of avoiding the second round effects caused by the turbulence of the beginning of the year that would have had an impact into our medium-term outlook. There are estimates by our staff of the counterfactual of what would happen if our policies had not been put in place. But they do refer to policies that have been put in place since mid-2014, not necessarily, not exactly to the ones that we've decided to that point in time. And they, the ones that I just mentioned, going back to 2014, they basically say that growth over this year, next, and 2018 would be 1.6% less than it would have been, than it will be after the implementation of the monetary policy measures. And the inflation rate would have been negative this year, and if I'm not mistaken, but may well be I am, about 0.5 percentage point less over the following 2 years. But as I said, these estimates do refer to the monetary policy measures that have been enacted since mid-2014.
Mr. Merli?
Alessandro Merli of Il Sole 24 Ore. Tomorrow in Amsterdam, you're going to discuss at European level for a proposal for possible regulatory changes to the exposure to sovereign risk of banks. I wondered if you have a position on that, if this is the right time, if they should be coordinating with the discussion at the global level in the Basel Committee. More generally, what is your position on this discussion? My other question is about the creation of a fund in Italy between banks to participate in capital increase of other banks and acquire non-performing loans, which you pointed out several times are one of the problems affecting the European banking system. I wonder if you have any comment on that as well.
Respond to the second question, saying that we haven't yet examined completely the details of this. I can say it's a step, it's a small step in the right direction. I would ask the Vice President to respond to the second question, but just wait. To the first question.
Well, regarding this issue, we have discussed it and we have participated very actively in the working group of the EFC that has addressed and prepared a report. And also,
I'll ask him to respond because he's the one who's going to discuss this issue tomorrow. Yes.
And also, we have been very active in the working group of the Basel Committee. So our position, which has also been discussed in the macro-prudential forum, where we have the governing council and the supervisory board at the same time, and our position has been that first there is reason to change the present system of zero risk weights. Second, that the revision should not create undue turbulence in markets where sovereign debt is used, like for instance the repo market and in general short-term money markets. And third, that it should be a change in the international standard, meaning coming out of the Basel Committee discussion, a principle, by the way, which is also mentioned in the Five Presidents report, that any revision of the sovereign debt risk weight regime should be decided in an international context to ensure a level playing field. So that has been our position. There are possible combinations of concerns with over-concentration of sovereign debt in the portfolio of some banks by changing the risk weights accordingly and creating then a price disincentive for those accumulation of possible excessive holdings. But the three principles are the guidance for our position in all this matter. And also, we think that this is a separate problem from any other problem. It's in itself a consideration, a reflection that comes out of the prices, and a consideration of a proper treatment of credit risk in the accounts of banks.
Let me add that there are three, at least there are three, say, sources of work on besides what's being done by the EFC and the ECOFIN. One is a report of the ESRB. Another one will be a report of the ECB. And and the third will be the report of the EFC, the working group on sovereign debt, of which you are part of.
Jones?
Claire Jones, Financial Times. Mr. Draghi, first of all, I'd like to ask you about the global uncertainties, particularly which ones have become more and perhaps less worrisome over recent months. We've had some better data from China, for instance, but rather disappointing conclusion of the Doha talks on oil. I'd just like to return for my second question to Alessandro's point on helicopter money. Very simply, do you think something like
All right, is this significant here?
could be done by the ECB in a way that is compatible with?
Thank you. I'm sorry, the answer to the second question is the same. We never discussed it. The answer to the first question, now, we've taken these monetary policy measures in March, and it was a very comprehensive set of measures. Since then, broad financing conditions indeed have improved. And we view these measures as being important in avoiding second round effects in the wage and price settings. And as I said in the introductory statement, growth is moderate, but it's steady. Now, as things are moderately improving, we got to be very careful about not losing focus from our main objective, which is the return of inflation to our objective of level below 2%. And inflation remains very low, will possibly be negative in the coming months. And this combines with the global uncertainty that was, I would say, highlighted during the IMF meetings in Washington. So the result the consequence for our monetary policy stance is that, of course, we keep the monetary policy stance as decided in March, and we now focus on its implementation. Second,
That monthly pivot point's still holding.
will continue to diverge from the monetary policy courses that prevail in other jurisdictions better placed in the recovery cycle. Third, if there were an unwanted tightening in broad financing conditions that would alter our medium-term outlook, the Governing Council stands ready to act using all the available instruments within its mandate. Thank you.
Thales.
Tom Thales from the Wall Street Journal. Mr. Draghi, you've emphasized twice now that all your instruments stand open for use. Last press conference, you said that interest rates, you didn't anticipate that there'd be a need to cut them again. Has that position changed? And why and how much further could interest rates fall? That's one question. The second question is on the euro exchange rate. After your last, since the last large package of measures, it's gone against, it's risen against the dollar and other currencies. How much of a concern is that? I know you don't target exchange rate specifically, but it's an important economic factor.
Bulls are going to wake up here.
About the ECB's ability to influence the exchange rate. Thanks.
Thank you. I'll answer the second question. Really, as I said many times, the exchange rate is not a policy target. It's important for price stability and for growth. We've taken the measures in March, and these measures have been effective and will be effective in avoiding second round effects in the price and wage setting behavior.
Well, he keeps saying that they haven't even discussed helicopter money.
Question, and I'll just again read what I said last time about the continuation of negative interest rates. So the Governing Council, although it gives a positive judgment about the past experience, is increasingly aware of the complexities that this measure entails. Now, I've said before, and I've elaborated quite with some length last time about the complexities that this measure might entail. I should say the experience has been broadly positive for the ECB. It has affected positively the credit conditions, easing them. It has eased broadly all the financing conditions. We have no evidence that it hampered.
So the way that you look at it is if they're not going to throw money out of helicopters, then the euro's not going to weaken any more than it already has.
Full year with negative interest rates.
Much of the euro USD drop has been based on the Fed raising interest rates at first 4 times this year, and then 2 times this year, now only 1 time this year. So the dollar was overvalued, and euro has no reason to get any weaker. That's the logic here on the up.
May actually conceal different realities. We also saw no significant evidence that these negative rates had been passed through to the depositors or the borrowers from the banking system. So all in all, the experience has been positive. Then one asks himself, is this positive experience going to be true for any level of interest rates? And the answer is no, of course. So the issue of negative interest rates is not so much an issue yes or no, it's an issue of extent. And so that's why the Governing Council said that it was increasingly aware of the complexities that this measure entails. And as I said before, if there is going to be an unwanted tightening of financing conditions,
CAD collapsed on us, and so did Aussie.
The Governing Council stands ready to act with all the available instruments in its mandate, within its mandate.
Thank you, Mario Bashchak, always Dispress Online.
Well, I think if you bought the pound yen near the 4-hour 21, you're fine. Nothing's changed over this period.
So far, Eurozone economy has been very resilient to external shocks, especially from the downturn or fear of downturn from Asia in the beginning of this year. So my question is, to what extent is that the factor of the lower real exchange rate of euro and other measures?
Is that the guy from Penn and Teller?
And my second question goes to the recently published credit lending survey that has been very optimistic with more than 30% demand rise for credit in the Eurozone, while the hard data point to 0.9% rise in loans to non-financial corporations. So I would like you to comment on the difference in the extremely positive demand rise and the barely rising hard data. Thank you.
Thank you. Growth continues to be moderate but steady. It's most
Yeah, he's out of breath too, huh?
And now investment. And
Some people get nervous though.
Dampened by the external component. Our monetary policy measures have been supporting growth.
Looks like fib wars are setting up, huh? Dangerous, man. Dangerous. Danger close. The 618 on the up. Right? And a 618 on the down. Fib wars. Worst case scenario, by the way. Worst case scenario. It suggests you're going to lose money either way.
Which, by the way, was highlighted in the last IMF meetings as well. And the third, what the IMF called the three-pronged approach. The third should be placed is appropriate fiscal policy, where we observe that for the euro area, this is very fiscal policy is highly expansion. But again, the issue here is not a question of.
Well, the more we hear that Draghi's not going to do anything to weaken the euro, the less likely the euro will weaken.
A composition that is being called.
But if you're a bear on this pair, sell it at resistance.
Lower current government expenditure.
Not 35 pips away from resistance, right?
This is the answer to your first question. The second question, really, I would say the bank lending survey shows that.
Was it ugly? I saw it came out, but I paid very little attention to it. Oh, negative 1.6. Yeah, but yeah, it's funny. It's Philly. Yeah, oh, whatever.
When we come to, we also asked. There was another question in the bank lending survey where we asked what use you're going to make of the APP, the Asset Purchase Program proceeds. And the banks answered that they use mainly for granting loans, which is good evidence that the asset purchase, or the QE, as it is otherwise called, is being transmitted to the real economy. But they also added that they are using more, the consequence of the APP for them is more to adjust price and terms of the lending.
Okay, so it looks like it's now 786.
And also they answered about profitability, which is going up because of capital gains, and funding costs that went down. So
yeah, you know, Crane brings up the point where it looks like, you know, the union's falling apart as far as European Union. But I bet you, you know, if money won't do it, terrorism might. Where Europeans work together as Europeans to fight terrorism. But then the terrorists win because then we get like a global religious war, right?
Schemes. The German citizens are seriously worried about their private pension schemes, and of course, all of those are dependent on the interest rate level, and they have little yields or no yields. Are you familiar with this kind of concerns? Did you discuss it in the council? And what would you say to the German citizens who are worried about their pensions?
Yeah, we are familiar with these concerns. We closely monitor these developments. It's pretty evident that pension funds and insurance companies like and other actors are really affected by the low level.
By the way, I don't know if you're interested, but I think Kiwi yen is pretty close to the 4-hour 21. Bottom of its sort of short-term range. I don't know if you're looking to pick it up.
Because of everything that went wrong and had been going wrong for years with the sector. But having said that, I think they are being affected by low rates.
Anybody looking for a Kiwi yen?
They also realized substantial capital gains on the bonds that we are buying because some of them are.
See the 5 here? Right, the 5 EMA here. 4-hour 21. I got to do it this way. Okay, you see the 4-hour 21 coming up. 5 EMA here. I don't know if anyone's looking for it. You see the bottom of the short-term range. Then you move the 4-hour. Right? Mean reversion on the daily. Just a thought. Don't like daily Stokes? Oh, let's talk about that. You know, this could stay overbought for a week. Okay. Remember, it's still bullish if we're above this area here. And it's got to basically make a low lower than this bullish engulfing candle to get this to turn around. So like you see here how it rolled over, up, sideways, lower, low. That's what rolled it over. So this could be down for another 18 hours. As long as it doesn't make a low, it'll stay overbought. So it could come down to this 5 EMA, move sideways. Tomorrow's 5 EMA is up, and then, you know, I guess Monday is up, Tuesday is up, and we're up here near 78 on Tuesday. I have no problem with that daily Stokes. I have a problem when it's pointing down. So like you see here, what turned it down? The lower low. Okay. What this is suggesting is higher high is not likely today, but it doesn't mean lower low either. Not yet. Remember, it's overbought because everybody's buying it. Pound yen coming down, euro yen stabilizing. Commodity currencies still look pretty weak. So if you were looking at some point to buy CAD yen, for example, it's starting the downward move, which means maybe tomorrow you're buying CAD yen.
Is certainly certainly welcome. Is certainly welcome. Having said that, by the way, and I'm responding also to remarks made by other public figures, our policies are the same policies that are being enacted by and large. Of course, each country has its own specificity. The same policies are being enacted in other parts of the world. Second, would a non-Italian president run different policies? Well, I think, of course, the answer I would give, yes, of course. But that would not be enough if my predecessor, Mr. Trichet, 2 days ago, he gave an interview where he said, I would have done the same things that Mario did. So he confirmed what is the assessment of the Governing Council in its entirety, which, as I said today, confirmed and defended the appropriateness of the monetary policy stance and defended the independence. Thank you. Oh yeah, the other question is about inflation expectations. We will, when we had low inflation.
And this is dragging on now.
And we are going to have low inflation for a long time.
What was the move? 50 pips?
Patient. We should be patient. We should follow and monitor closely how well, first of all, let me say.
Well, I see a little stabilization in gold on the double bottom. Not gold, dollar. But I see a lot of commodities coming down. So, for example, if the ECB is not going to print money and to stabilize its economy, or to, let's say, stimulate its economy, then commodities are overpriced. Because the idea is if you do quantitative easing, you're going to create demand. But he's not doing anything like that. So, oops.
And expectations will also follow that. What is true is that...
Really, since the news has come out, it's moved maybe like 50 pips. I mean, that's nothing. I mean, it does that every day at the London Open. Right? If Euro USD moved 50 pips at the London Open, no one would even make note of it. Wouldn't even be news.
So now we have to be patient. The correlation with oil prices has decreased, but we have to wait.
Thank you so much. President Draghi,
Aussie yen making a lower low now, going through the hourly 21. Whoop, whoop, with divergence. Yen looks like it wants to get strong, in particular against the commodity currencies. CAD yen coming down, Aussie yen coming down. Kiwi yen testing that support again. Pound yen rolling over, euro yen thinking about it.
people might resist borrowing for capital investment because they're concerned that the Germans are leaning on you and leaning on the council.
I wouldn't sell Kiwi yen into the 4-hour 21, however.
Is really about the same thing with regard to Brexit. Has the council seen any evidence?
CAD and Aussie were way more OB than Kiwi.
PLC investment into the Eurozone ahead of the June vote. Thank you.
Thank you. Answering the first question.
Yeah, pound yen is fine, Ryan. Just make sure you got resistance. Okay, but it's made a higher high. I don't know why you'd sell a higher high without a reversal pattern, but you could just make sure you got resistance.
And their shape and their success. But certainly, criticisms of a certain type could be viewed or perceived as
like we had what, euro yen short, right? What was the resistance on euro yen? Let me bring it back up. Okay, right here. Okay. So it just failed to breach 125. That's all. So you'd be playing the psych level. You know, and going back before the news, do you guys remember doing this? Like I showed it to you. Right here, all the way back to February. This level's resistance. And then I drew the line. This was a sell zone. The next one up here was a sell zone. Right? So we got up into that sell zone. It failed to go up. And it's still holding below it. So yeah, well, I don't use R3 and S3. It's just, I don't tend to. And on my other platform over here, what am I looking at? Anyways, I have some weekly or monthly pivots going on in this area as well. Okay. And I think I told you up here twice that if you're buying way up here, then you lack discipline. Or was it down here? This one, you lack discipline. Either way. I think if you made money long in this green candle, you just lack discipline. You're at best a gambler. At best.
Said that you will focus now on the implementation of previously announced measures. And I wonder what the message is there and why you've decided to give it such prominence to actually lift it into the conference call. Does that mean you think we're done now, or you explain that a little bit? My second question is earlier in the week, the ECB said that following the extension of the QE program that you decided last month, you now expect more national central banks to have to engage into substitute purchases. Does that mean then that you do see risks of scarcity emerging, at least towards the end of the program? And now that you've branched into corporate bonds, does it mean that the next logical step might actually be equities? Thank you very much.
Thank you. I can answer first your second question. The answer is no, we don't see risk of scarcity. And
well, this video is going on, or this webinar is going on and on and on and on and on and on and on, and nothing's happening. Stock market's opening and stuff too. You might want to look at that. I think I'll pull the plug pretty soon. You know, it moved 50 pips and then came down 25. So it's almost like nothing happened. But yeah, just so it's too bad. It would have been nice to get some more QE out of him, but not surprising, right? So maybe he'll announce something in June for October. Yeah, right. So Hayden got 2 pips, whoop, 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 or 20 pips. Nice job. Let's see, anything else going on? Is he done? I think they're done now. Yeah, I think they're down now. So, Coolio, another amazing day. Sad thing is, I got up early for this too. So it's 9:30 in the morning. And I need a nap. But anyways, hey, thanks for hanging. It's better than being alone, I guess, right? Peace on earth. May the pips be with you. May your profits be above average. See you tomorrow at fxstreet.com. Thanks for being on my team. I appreciate it.